All right. Hey there. Good good morning, everybody. Chris Briggs with Texas West Capital jumping in here live. I can't even talk this morning with you at just after 11 a.m. Central Standard Time here on Friday, the 29th of September, 2023. And we're going to talk about the dollar. Has it reached that top there? Bitcoin keeps, it's moved up here recently and is holding support. Is that going to continue up? We've got some thoughts on that. We're going to take a look at a few other charts, including the SPY there. We're maybe going to take a look at Pepe. I think Enjin is another chart I've got here, Sol, because we've been talking about that a bit. And we got some other charts here. So, we're going to take a look at it. We might even check and see how Ape is doing. Ape is just, Ape has continued to just fall off there for a while now. So, is it finally maybe finding that bottom, that point where everybody gets overly bearish? The end is there. It's never going to change. It's always going to go down and whatnot. So we're going to do that, guys. All right. So hopefully you guys are ready for this. And of course, we'll always talk about some trading wisdom, stuff like that. As we get going here, who is here already? I see Deadly123. What's up, man? Just can't even talk, man. Hope you have a great day, a great weekend. Data's here as well. And everybody else kind of listening in there, even if you can't chat, that's all right, guys. We do enjoy hearing from you, obviously. But, if you're here again, guys, the idea here, there's a lot of hype, a lot of nonsense, a lot of emotional bullying basically going on online. They speak in a way that tries to force you into doing things, emotionally. We don't do that here. What's going on, Kimasabi? I see you checking in. We don't do that here. I talk about what the charts look like and why I think A, B, or C may be happening. But we always talk about validation and invalidation levels. Because at the end of the day, guys, it doesn't matter how long you've been doing this. You're going to have an opinion, okay? And that's good. You have to have an opinion. You have to have some place to start for what you think is going to happen. But, you have to be open enough to understand the realities of the situation, which is nothing is guaranteed in trading except that you're going to lose money from time to time. And the newer you are, the more money you're going to lose, and the more often you're going to lose it, which makes risk management the most important thing you'll ever do day in and day out as a trader. But other than that, we never know when we take a position. There is no guarantee that price will do what we think it'll do. Okay. So you have to have validation and validation levels because that will keep you safe. Mark, what's going on, man? My favorite Canadian coming in. I see you here. Let me see. So that's what we're going to kind of do here. Hopefully you guys are doing all right here. By the way, we have moved over to members.texaswestcapital.com. That is our community site now. We have all our community. We're moving over. We got about 140 or 150 that we've migrated over there so far. We're still working on getting everybody over there and all the content. Oh my gosh. Uploading we've been doing this for 7 years. So 7 years worth of videos and courses and things. Oh my gosh. It has taken so much more effort than I thought it would be. So we're slowly getting it over there. If you are over there, that stuff, it'll showed up more and more, but so we got a ton over there. Don't forget to hit the like button, guys. Hit the like button, subscribe to the channel, follow us if you're watching us somewhere else. We can do all that. Wazobia Dollars, what's up, man? Hey, be sure to check your oh my gosh, your link there for the new platform. I verified that a while back, and it says you still haven't continued on there yet, so be sure to check that, buddy. If you have any issues with it, again, send me a message and we'll get it figured out. Nevlusian, what's going on, man? Good to see you. So let's see what we're doing here. So here we go, guys. This is the DXY, okay? So we actually have this bearish engulfing candle that printed yesterday, okay? Today's PCE numbers came out. Remember, the PCE is the Fed's preferred inflation gauge. That came out year over year, core PCE, which is the most important reading for the Fed, right? It was 4.3 last month. Year over year was expected to be 3.9% this month, this previous month, the next month, year over year. And that's what we got. So we hit expectations, but more importantly, those expectations that 3.9% is almost a half a point down, guys, from 4.3%, right? So it's a strong move down over the month, and that's what we're looking for, all right? So a dropping inflation doesn't mean prices are going to come down, guys, all right? Remember, inflation is happening, so prices are still going up. They're just not going up as hard and as fast, okay? So just over a year ago, if we look at CPI, inflation was, 9.3 or 9.5% year over year, right? Come down to, CPI, say last month, where it was, right around 4%, something like that, 3.7%. And so, again, it doesn't mean that prices are coming down. What it means is that rate of inflation, the rate of the rise in prices has slowed markedly, okay? So that's what it means. And I say that because I've had a few questions about a few people not understanding. They think, oh, inflation, sure, you say inflation is coming down, how come prices are high? Well, because inflation is still going, right? It's still going. Which brings me to another point, guys. Stop listening to Susie Orman and all them people about paying off all your debt and whatever. Okay, I'm going to tell you what. If you've got inflation, you want to pay your debt out over time because it gets paid out with cheaper dollars. That's the end all be all right, guys? There are two kinds of debt. Don't take on stupid debt. Don't go borrow, $5,000 to buy a Gucci purse, ladies, or or men, whatever it happens to be. That's bad debt. You don't want that. But you use your cash or you get a loan or whatever so that you can buy hard assets. Okay. If you're in Bitcoin, you know what I'm talking about. Bitcoin, right? That's hard money, right? A hard asset. Or, real estate. Okay. That's what you want to do. You don't want to, borrow money to buy a car or to buy a house, your personal residence. It's not an investment, guys. I know if you're in the U.S., we've been taught that it's an investment. It's not. You would do better off taking that $100,000 you can put for a down payment or whatever, and putting into some sort of syndicate and getting control of an apartment complex or something like that. You got cash flow, you got appreciation, you got depreciation, all this great stuff. But anyway, that's for another time. We won't talk about all that. But yeah, just some thoughts there. Hey there, Frank, Sats, Fibbo. What's going on, guys? I see y'all here. So anyway, here we are with the dollar. And as you can see here, guys, my count, again, suggests that we've got a 1 here and then an ABC up and an ABC down. And we're working on finishing 5 up here as an expanded flat correction. So right now we've hit this, maybe it's a weekly, what is that supply structure there? Yeah, that weekly supply structure right here. We've hit that EQ. Look at this weekly candle, not so great. You had some wicks to the bottom, and now you're getting a wick at the top, right? So potentially topping out here right around that 50%. But, if we continue pushing up, we'll look at the 50% here, right around 107.5. And then we would look at the 61.8 at 109.2, 0.23. But, you can see here, obviously, weekly Stochh RSI has been overbought for almost, a month and a half now. RSI is almost there. If we jump to the daily, you can see that we got rejected pretty good, well up here into overbought on RSI and Stochh RSI coming back down. What I'm looking for initially is a breakdown below this ascending support. So right now, that'd probably get us right here around, what is that? Probably right there around 105.4 or 5. And if we can do that, good. Then what I'm looking for is a breakdown below 102.936. And if we get that, then hey, we're most likely done, wave 2. And then we want to break down below wave B here at the swing low. And that continues at lower, all right? So I know a lot of people freaking out. Oh, my God, the DXY here is, what is this? How many green weeks is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11th green week, right, in a row. And everybody's like, oh, my God. And so people get to that point that, oh, my God, that's it. It's time. It's all doing this crazy thing, and it's going to break out higher. And, it could, but I'm telling you guys, right now, it's just a normal pullback. It's just a normal pullback. Whether this were to be A, B, or 1, 2, I mean, we're just getting right to the 50% pullback as a flat here, right? There's nothing, overly free, but everybody's going to freak out about it because people don't tend to understand, they don't know Elliott wave or know how to use it properly. And so, to them, it's scary. They don't understand what's going on. So I'm not overly concerned about it, guys. We're looking for some follow through down below that ascending support, especially after that bearish engulfing candle. I'd like to see the DXY fall off today and close lower rather than as a doji here. Especially if we can do that, then next week opening up, we should, we might get a little bounce at that support and then, kind of where we are and then break on down through. But even if we close out the day as a doji, we're still looking for a likely followed through lower. And if not, again, 107.5, 109.2 target areas there as we do that. Okay. Assets and cash flows. That's right, man. That's right. It's what it's all about. So I mean, quite possible. We'll come up here. We're hitting a great, like I said, a great resistance area. Bearish engulfing candle yesterday. We will see how this plays out. Weekly looking not necessarily strong here, looking kind of weak, but we would want to see, of course, next week then kind of pull on down. And we look at that, we go, okay, well, yeah, that's what I'm seeing. So what does that mean for everything else? Well, wait, let me see. What's Kimosabi saying here? He's saying, what are you saying there, buddy? Something interesting is the levels that markets are at given where they were the last time DXY was at this level. You talk about like comparing it against, say, SPY or Bitcoin or something like that. Yeah. We can jump over. We can jump over real quick at the SPY. So there's the SPY, guys. I mean, that's a pretty clean pullback right now. That's an ABC, 50% pullback just about, right to the target area. We've got this great long lower leg doji right here. That gets us right into kind of this lower volume node area here, the high volume node of that lower volume node. It's kind of where we're getting here. We're almost bottomed out and oversold here for Stochh RSI. RSI is just neutral. So, I would be looking for a rally up higher. I think that's probably done there. If so, of course, a breakout above wave B here at 453.67 will add confidence to the count. Wave 5 of 3, minimum expected target at 482.50 from here. So the idea would be that we get 5 waves up toward that area, which, by the way, is a new all-time high. Pull back for wave 4 and get a wave 5 out of that beyond that. Yeah, Kimosabi saying last time DXY was at this level was back in November of 2022. Again, not overly concerned about it. Again, the pullback right now is what we would be looking for on a wave 2 there for the DXY. So, I never see a reason to get emotional, guys. I never see, you guys have been following me for years, some of you guys, and I've never once been emotional about it, right? It's always just about, listen, this is what it looks like. This is why, but these are the, validation levels. Like I said, this is the count that I think we're at here. Looks like we're probably done. My opinion is that we go higher from here, but the validation level is the wave B extreme here at the 453.67. If we break out above that, that adds confidence to the idea we're going here, right? If we continue to drop lower here, into wave 1 right here at 418.31. If we drop into that, well, then at that point I go, okay, at that point, I don't think, I'd have to go back and readjust what we're looking at here because at that point I'm like, no, that doesn't seem correct. At that point, what we may end up having is something like, I don't know, maybe a 1, 2, and then a 1, 2, 3, 4, 5. So you get like a 1, 2, and then a 3, and then you get this A, B, C, D, E as a triangle, maybe as a 4. I don't know, and then maybe somehow this turns into a 1, 2, 3, 4, 5 as a 5, and then this could come back further here toward this low volume node over here, which just right around that weekly pivot at 404, right around there. That's only if it continues breaking down into wave 1. I'd say, okay, well, we've got wave 1 wave up, second wave on the pullback and going further. So again, my opinion is it looks like it's looking good right now. Let's see how the day closes. Looking good right now. It's the target is where we'd be looking for it. We're above wave 1. It's 3 waves. So we'll look for the rally up higher. But if it doesn't break out above wave B and comes down into wave 1 instead, well, then all of a sudden we start looking like, okay, maybe this is 1, as I kind of looked at potentially that count there. And then this is 2 pulling back here, this 404 area. And then we'd have 3 on the breakout. I'm good either way. I don't really, I'm not going to freak out because if it drops down here, we already know what we're looking at, right? So no reason to freak out. So I'm okay if it does do that, and I'm okay if it does rally up here and follow this current kind of target we got going there. Does that make sense, guys? That makes sense? You guys ain't freaking out, right? No emotions, right? That's the goal. What's going on, Bitcoin? Look at Bitcoin. Look at that. Still the same general structure I've been talking about. Let me pull up the other chart here real quick that I've been using for a while now. Here we go. Boom. Again, still this same one. I've got this on Twitter there, X, whatever you want to call it. I've got it posted there. A whole bunch of little information here. Heaven forbids it breaks down. We start looking at 23,394, 22,446, 21,624, that kind of area. I mean, no big deal, right? No big deal. Everybody else is like, oh my God, if we lose that, we're going way down here. Maybe we'll go down here, but really, again, if you bought this accumulation here, then that's not a big deal. If you sat here and argued with people like me the entire way up and refused to buy, and now you bought at the top and it's getting done, well, yeah, then it's going to be a little bit on your heart there, a little bit breaking on your heart, right? But right now, what I like about the structure here, let me go back to the other chart I had. What I like about this, right? Locally. Okay. So every other time when we've rallied up, we've broken right back down, right? Rallied up, broken back down, right? Rallied up, broken right down. What happened this time? We rallied up, we pulled back to that previous resistance as support, guys. This is the difference this time around. You see that? We didn't get that anywhere else. Everywhere else, up, immediately fell back. Up, immediately fell back, right? Up, immediately fell back. Up, fell back, up, and then fell back, right? So here we are, though. We had this extensive sideways right here, right? So this is how long? This is, I don't know. We'll say we put it together over here. About a month sideways here, right? Where most of it was right in this area right here, okay? And we broke out through it, retested it, came up, retested it, came up. And so it's holding. So we're looking at this as potentially building us a base right there, which is something we haven't seen previously, okay? That to me is what you should be paying attention to in this area here. Instead of assuming it has to fall back down, it's the fact that we have this, everything else before has always fallen back through it, right? Falls right back through it, pops up, falls back through it, pops up, falls back through it, pops up, falls back through it, right? Continues to build itself over here. And then finally we get this move. And now we've rallied up to this descending resistance here, right? EQ working really well as support and resistance down here. And so if I'm looking at this, by the way, let's zoom into the hourly here because that hourly pivot is important there, right? So if we look here, we go 1, 2, 3, 4, 5, right? And we go here, we go 1, 2, 3 triangles of 4, 5, A, B, 1, 2, 3, 4, 5. So it looks like what we have here is a flat right here, 1, 2. This up here a little bit, okay? And then here with this pullback, and I'll tell you why I like this structure as well with the with what we're seeing here with the resistance and the pivots and everything. You can see A, B, C, 3 waves back, 50% pullback, right around, and it's holding at that daily pivot, right? So you've got kind of this leading diagonal here. which says, waves 1 and 3 there, and then waves 2 and 4. So 1, 2, 3, 4, 5, A, B, C, right? So we go 1, 2, something like this. And so if this holds its support, and this is looking really good so far, we should expect an impulsive breakout above this strong resistance. And that impulsive breakout would be wave 3 of wave 3. And that's what we usually expect on the breakouts of these longer term kind of descending channel resistance things. So if the 50% holds here, I mean, it could always drop down lower there, 61.8 or something, but right here, this gives us 1, 2, 3 up here around 28.910, minimum expected, right? Which gives us a 5 up here at 29.465 or so, which is wave 3 of the larger degree. So let's go ahead and measure out this right here and see where wave 3 would hit the 1618. Something like that. And so the 1618 is actually up here around 30,442. So the idea would be that we would probably get an overextension here. So wave 3, I would think it's probably going to actually hit the wave 5 target there at 29,465 or so. That would then give us a pullback here of right around, generally expected right there around 28,390 or so, which puts us right above this important level here, this 28,180. On this chart, on this Coinbase Bitcoin USD chart, it's 28,184.89. That's the significant area. That is the significant area I'm looking to break out above in the larger macro picture there. But that would give us then a pullback just prior to that. Let's see here. Yeah, right here. And then that would give us then the wave 5 of 3 up here at right around 3120. And so if we do that, let's see, we'll get all these other ones moved out here now. So that gets us then a little bit above, or actually, let me see here. That gets us right around that 1618 area. So that starts looking better there. And then, of course, again, we'll have the pullback for the wave 4. Which would get us where? Right back around 28.5 or so. Let's see here, 28.5, which is just this lower volume node area. Makes a lot of sense. And then minimum expected, wave 5 off the swing low way down here will get us up here around 31,090, 31,100. We'll say 31,100 because it's round. And that gives us then 5 waves up to the swing high here, which is usually what we look for. Now, this isn't time-based. Okay, don't worry. Don't go, oh, my God, so wave 4 back here on October 29th. No, I'm just pushing this up, right? And so, even if you don't want to jump on it, even if you're, hard to convince and, you're worried and whatever, that's fine. Because once you get up around that area, we should, look for that rejection. And you should bring it right back down to these wave 4 areas, this previous wave 4 on the way down here, all around this 28,000 area. So you'll get a 1 up, a 2 on the pullback, and then the 3 on the breakout there. So that's what I'm looking for there. But it takes steps, right? First, we need the breakout here. It needs to be an impulsive breakout here. We want to see this thing just kind of take off. Okay? Want to see an overextension of wave 3 and maybe even an overextension of wave 3 here to get us a wave 5 up near the swing high up here. All right? What's up, Andrew? Yo, man. But that's, so that's what we're looking for. That's what we're looking for. But it starts locally, guys. It starts right here. And so what does this mean? That means if we break down below this swing low over here on this chart, that is $25,983.78. If we drop down below that, that invalidates the count. And all of a sudden, this starts looking like an A, or, like a 1 and then a 2, 3, 4, 5, and we'll look lower. And again, looking lower just has those. So is it these targets over here? Yeah. I mean, again, 23,394, 22,446, 21,624, those kind of areas on the way down. Because that would still look like 1, 2, and then 1, and a flat is a 2, but that's the 61.8, the 70.5, and the 78.6 retracements of that circle 1. So generally where you would look for, right? Nothing scary here, guys. Nothing emotional, nothing freaky, nothing whatever. People freaking out, man. People getting emotional. Don't do that. It's just going to cost you money. Okay? Just keep paying attention to what's going on. Understand where your invalidation levels are, and then if it gets invalidated, understand where you're probably looking to the, to the downside in this case, right? Even if you go beyond the targets, you can still get in short toward those targets and then take a partial profit or have a trailing manual stop loss or a trailing stop loss. So sometimes you're getting down there to keep going with that trend, right? Trading is not, trading itself is simple. Why does price move like it does? It's simple. Dealing with your emotions is what makes trading hard, okay? So trading is simple, but it's not easy. If it was easy, everybody would be doing it properly and making a crap load of money and, wouldn't be so upset all the time, right? But this is the structure here, guys. This is what we're looking at. There's nothing, like I said, it's just nothing there that everybody out there on Twitter and everywhere else is going to have you guys all riled up and concerned and worried and freaked out and fearful. There's no reason to be. Trading, you should not be fearful. You should not be overly exuberant as a trader. Understand that it's just a cycle. It just moves through a cycle, right? The only time you become really fearful in trading is if you're well over leveraged or your position size is too large, where if you lose a little bit, it goes against you, you're going to lose a lot of money. And if you're doing that, you're not trading, you're gambling. Understand, guys, there is a difference. Some people come in and they're like, oh, trading is just gambling. Trading is not gambling. Trading is not gambling, guys, okay? It's a difference. The only people that say that are those that haven't figured it out yet. Okay? You got to have a plan. And you got to make sure risk management is your top priority. If you can do that, then you're going to be all right. Okay? As long as you're really paying attention. Fall King Pepe says, it's true. When my wife argues with my trading, my win rate falls. It is, though, yeah, so I mean, again, I like the pullback. You can notice that the pullback I noted, noted on the other chart is this one right here, right, where we pulled back to. Look at that right there. I mean, that's that same area. So even though it was here about a month, it was over here as well. It worked as support and resistance over here as well. So, a lot longer because you had to work in a support here from mid-May until, and then resistance here through June, May. So, another month over here and a month over here, same area. So that's a good rally there. And again, locally, you got the daily pivot right above you and the descending channel resistance, and then you've got your hourly pivot right below you. Okay, so now we just want to see follow through higher. We want to see a nice impulsive breakout of that. And remember, if we can break out above this 28, whatever it happens to be, whatever chart you look at on this particular chart, this Bitstamp Bitcoin USD chart, it's 28,142. But it's this, for me, it's Tuesday, August 29th. It's that swing high. Whatever exchange you're looking at, it's that swing high up there. You break through that, this bearish market structure is broken. Coming off that it's coming through that high there. Let me see here. All right, guys, be nice about the ladies. So yeah, so again, dollar's doing what it's doing, not really worried about it. Overall, the bigger picture is, until proven otherwise, it is what it looks like it is. Same thing with Bitcoin, let me see here. Same thing with SPY. Again, with what's going on SPY, can we get the rally up and break out above wave B? If not, we look down here toward, the 410, 403 kind of area, lower volume node area. And then we look at this as maybe a 1-2 here and heading up, right? As a 1-2, and we'll get a 3, big 3 out there. So, I mean, again, guys, there's nothing to be overly stressed out about. There's nothing to be overly crazy about. It's not difficult, right? It's simple. It's just not easy. What we got on Pepe here? So Pepe, I was looking at this, and I think we might have 5 up here into this resistance, this low volume node over here. See it right there? Getting rejected. Looks like 1, 2, 3, 4, 1, 2, 3, 4, 5. So it looks like Pepe may be rallying finally off the lows here. And it's right above the daily S1 pivot. We like to see that. Basically a double bottom here, rallied up, which is what we like to see. Pull back, the resistance as support, rallied up. Again, things we like to see, right? Ending diagonal here. So if we get this pullback, first target is right here around 703. Again, I'm ignoring all those other zeros in front of it. And then, secondary target right around, what is that? 676. That's a 61.8. And potentially even 70.5 here. Right around 657. I mean, those are the targets I'd look for. I want to see this continue to fall back off here, though. But I think that may potentially be a 1, and then we have a 2. And then we'll look higher here. And so if we reject, if we continue rejecting from here, building wave 2 toward the 50%, that would give us minimum expected wave 3 up here at about 1182. But let's just say it goes all the way here to 70.5. Could even go to 70.86. We'll say so. We'll say minimum expected wave 3 to 1106 in that area right there, 1105, right there around that area, which gives us 5 waves up at the R1 pivot on the day, well, the current daily, right? Which is going to change. It's going to change. The end of the month's coming up here. And so if we get that, I mean, it's a logical area. It's a strong, it's a pivot. Again, that would kind of get us back here right into this area right here. It's 50 to 61.8. Makes sense, right? You break out through this supply here, come back, it becomes demand. So minimum expected, that's only if we get the pull back again all the way down to the 70.5. If we get the, if we get the 50% of the target will run a little bit higher here, probably closer toward this 1375 area. They're in that swing high. Well, yeah, and then we get that and continue rally up there. So we'll see what happens. Again, no guarantees, but it looks like it's setting up right here. So you want to see that pullback. You want to look. What does this mean? Does this mean you go long right now or you go short right now? No, neither. The trend is up. What that means is in your target area, you pay attention in your target areas and you look for a reason to go long. You look for a confluence of events, a confluence of indications that say there's a likely reversal going on there. That's what you're looking for. You're looking to go long because your trend off this low here is up. This is an uptrend. You guys lose so much money trying to long this and short this and long this. I'm telling you right now, guys, pick a direction and stick with it. If the trend is up off the bottom here, it looks like 5 waves up. Don't worry about shorting it. Look for your opportunity to long it in the target areas. Look for that opportunity to long it. You'll be a lot more successful over time. You'll lose a lot less money because you won't be stuck, jumping in short here. This may or may not be the top. Not enough has happened to say it's definitely the top here. So if you're trying to short right here, you could get caught if this thing pops up higher. Does that make sense? So this is, this is what we're looking for. I don't know. I like it. It looks pretty decent right here. We had this descending resistance with this large spike of volume, large candle spread breakout. That's usually indicative of a rally back up to the point of that that descending resistance where it begins, and that's exactly what we got. I mean, I guess if you like head and shoulders patterns, again, guys, I'm not a big fan of head and shoulder patterns. But inverse one here, maybe. Left shoulder, double head here. 1, 2, like that. Okay. We'd have to get this here, pull back here. I'm just not really a fan of that. I don't like the way that looks. Your head and shoulders, you generally want to look pretty. It doesn't have to be exactly even, but it has to look visually like it should be, right? You don't want to look like a Pablo Picasso painting, okay? So I'm not really a fan of that being a head and shoulders there. I can see definitely a double bottom down here. Right there. And then, I don't know what I just did. Okay, let's try this again. Right there, and then, oh my gosh, it's ridiculous. I'm just draw another one. So stupid. Right there. And then, of course, you had your breakout here. This was the level you're looking to get above. And, I mean, it worked out great, right? And it looks like it's probably hit the target there, pulled back, retested, and rallied up higher. So, yeah, I think it looks pretty solid, like 5 waves up. So we're going to look for that pullback toward these target areas and then look to long it and head up higher. And if we can get that, all of a sudden it starts looking like, now this is the KuCoin chart, so it doesn't have all the other information over here, but it starts looking like that pullback is complete and we're heading up higher at that point. In terms of the big macro, again, you want above this swing high up here at about 1880. That kind of area right up here, or what's that? 1890, I guess. Yeah, this area right here, because it'd be A, B, C on the pullback. So if you can jump above that, then you should be looking at a new all-time high coming in. I'm not happy. I'm really just not happy with the idea of it being an inverse head and shoulders there. It just looks too off on it. I would stick with the fact it's a double bottom here. That's a very clear pattern, worked out like you would expect. Again, if you were to measure this out, target-wise, you hit your target right here with the rally up, right? And then it pulled back and retested and was good, went up. I mean, what's going on here is the same thing. Basically what's going on here, right? So you have your area here of resistance, right? You've got this area right here. I'll just throw this in here real quick. Yeah. So you've got this area of resistance, and all you're doing is retesting it before potentially rallying up higher. In this case, though, this one would probably be closer to the idea of a inverse head and shoulders. But again, I really hate the pattern. I'm not a fan of the pattern. Too many people get it too wrong too easily. And if that's the case, then why use it, right? If you're in trading, you want to look for those things that make the most sense. But there you go, right? And it's come back. It's just retesting that neckline there as support. So I don't like how small this this shoulder is compared to this shoulder, but definitely looks a lot better there than it did with the other pattern there, on the other one there. ENJ. All right, still looking for this to finish out down here. Remember, this is the target area, is this kind of this grayish area. We kind of hit that 61.8. Looking for maybe 65. It continues down. Ultimately looking for a breakout above wave B here at 56.80, 56.8 cents. If you can get that, then we should be heading up. And, all of a sudden that gives us this target up here around 698.5, which is actually pretty crazy looking, right? Did I get that right? See, it seems so far up there, but if I just use the regular fibs, not the fibs based on log scale, if it makes you feel any better, you'd be looking at this lower target down here. This one I've got marked on there. $8. So, I mean, if it makes you feel any better, look for an initial target of $8. This one here is based on the fibs, based on log scale. And it went pretty hard here. It went from about 3 cents up to a swing high up here, $4.84. So, if we look at that rally was about 14,600%, right? The rally from here up here would be a bit more. It'd be 328,000%. But wave 3 is larger than wave 1, right? But we'll see. Like I said, you can use this initial target right here and give you about a 3,600% rally. If you get it, if it continues going on through that real well, you can look at the fib-based extension up here. But nonetheless, here we are kind of hovering around here. It can fall further. Again, if we fall through, we got 65 there at the bottom of that range. Then we got the 70.5 in this high volume node right there at 14 cents or so, 14.15 cents. And the 78.6 is right at the edge of this low volume node, about 9.5 cents. So, I mean, those would still be the targets I'd look for if we were to continue lower here. But we're going to see if this support holds if this resistance holds the support right here. What I like about this is this movement here, right? So we've got this kind of flattening out here. We have the strong decline kind of starts, circling here. You got kind of this idea going on, right? And then, you kind of have it doing this thing. And so you're starting to get you had the closer kind of moves there, and then now they're becoming wider as we're going sideways. Usually that's a bottoming process. So again, wouldn't be surprised to see it rallying off here to head up higher. So I think there's some potential in there. Like I said, even if you're just getting up here to $8 from, from right around 20 cents or so where we're at, I mean, that's a huge rally, right? And that would only be, it looks like wave 3 in here. So, yeah, I'm kind of looking at. Let me see here. CLSK. SK. Let's change the date on this. 29th. Cleanspark. Let's get that on there. Let's see here. I mean, my first thought, if I look at this, is 1, 2, 1, 2, 3, 4 is a triangle, 5. So 1, 2, 3, 4, 5 maybe. Just a real quick look locally. That's what I would see. Let's see how that looks in terms of projections here, extensions. Hey, look at that, 1618. So yeah, I mean, that was just a quick visual. You guys saw that, right? Just like that. It's not like I had this planned, but it is what it looks like. Let's get this marked out in here. So 1, 2, 3. A, B, C, D, E. And then, of course, like I said, that gives you 4 of 3, gives us 5 of 3 up here. And it's a deep pullback. There is a deep pullback on that. So I mean, so I'll talk about the opposite here in a minute. So we've just kind of pulled back wick into wick, wick 4 into wick 1. That pullback is actually how far here? It's about 70.5%. So I've got two thoughts on this. One is we've got it like this, and we need to get a rally from where we're at right here. And that gives us a target right here at the R1 pivot on the weekly, which means that would give us one up. Wave 2 should pull back to the pivot, 50%. Yep. See that right there? Percent there. So my first thought is, okay, this is what we kind of have here. My second thought would be maybe it's a leading diagonal. Maybe it's 1, 2. And this ends up being, 3 over here, and 4 is a triangle, and then 5. And then we get a bit more of a pullback there. So it could be, a 1, 2 on there. Normally with the pivots like this, though, you'll get 5 waves up to the R1, and that'll give you a wave 1. You'll get a 50% pullback to the pivot, which will give you a wave 2, and then it'll go up higher. So I would look initially at that R1 pivot. If this did happen to be a 1, 2 as some sort of leading diagonal or something here, again, that pullback is right around that 61.8, 70.5 area. And all you would do, if we go from here, for instance, you'd look up here toward 39.83, right? But you don't have to know which one it is yet. You just have to know, okay, if we're getting a reversal here, initial target is right here at the R1 pivot, right around $10 or so, $10.10. And if it keeps moving up pretty strongly through that, then you can look at the idea, okay, maybe this is 1, 2 rather than 3, 4, 5 to give us a 1, 2. And so in that case, 1, 2 gives us a 3 up here. And so you just play it that way, guys. Pivots, just generally, they lose their effectiveness. I hate to say that. I don't want to say it that way because you're not going to understand what I mean. I would be, if you're using the traditional pivots, I would be more cautious as to how strong their support or resistance is the closer it gets to the end of that pivot, whether it's hourly, daily, weekly, whatever. It's still, as we always show, always look left. It's still a point of resistance or support, but I don't give it as much strength there toward the end of it when you get down toward that last little bit. If we're looking at the weekly here, we've still got, a quarter of the year left. So it's not like, oh, all of a sudden it doesn't work or anything. But yeah. So, yeah, that's what I would do. And so it's a quick, easy trade. It's like, okay, if we get a reversal here, I'm looking initially right here. If we keep moving up impulsively through that, and we'll look at what the, you would want to look at what the wave structure is leading into it. And you could potentially look at it again up here higher off that and just go, okay, well, there's 1, 2, and there's 3. Otherwise, it would be, 1, 2, and then 3 up a bit higher. I like the idea of it going. I like the count as it is here because what that means then is, let me see if we get that 50%. Let's say we pull back kind of. Oh wait, no, to the pivot here. Your 3 ends up being up here around 101, and your 5 ends up being just beyond into the all-time high there. I mean, this isn't terrible at 69.85, but generally what you're looking for. Is 5 waves up into previous resistance, or in this case, previous resistance here. So, I mean, it doesn't really matter either way, but, I'm good looking for a reversal here if we can get her a little bit lower, especially if it goes a little bit lower, though. We'd look at this more like a 1, 2 and look higher toward that $39, $40 area on that. Do I hedge my trades? I do not. I don't have a reason to. I see a lot of people out there. It was more prevalent in crypto probably about a year and a half, 2 years ago, where it seemed like everybody and their grandfather just learned about hedging, and they started telling y'all that you needed to hedge. Most people don't need to hedge, guys. Most people don't need to hedge, okay? Hedging for a lot of people is going to just cost you a lot of wasted profit, okay? If you don't know what you're doing. Hedging is an advanced trading strategy, guys. And as a just as a trader, you really shouldn't be looking at hedging your positions. Stop listening to people telling you that nonsense. Because you have to do it correctly. Because if you don't do it correctly, sure, you're hedging it, but you're losing a lot of your potential profits. And most traders, new ones especially, that are hyped up into doing this, end up hedging incorrectly. And they could have had, say, $2,000 in profit, but they end up with $300 in profit, right? And that's usually what happens. Solid risk management and a proper understanding of validation, invalidation levels, depending on how you trade, right? That will get you so much more further ahead than hedging will, guys. I know that's probably not what you want to hear because, like I said, every influencer and their mother seemed to have learned all of a sudden about it, a year and a half, 2 years ago, and it was everywhere. But I'm going to tell you guys right now, doing this for as long as I've been doing it, there's little reason why you should worry about hedging your trades. Even if you're buying a spot position, that you're just holding for a long time, again, if you're continually hedging incorrectly, which most people do, as prices going up, you're losing significant amounts of profit. Because remember, all the hedging does is it says, listen, if it's coming against me, I'm going to make money on this other thing here, so it cancels out, right? Your loss is there, but you're still losing that profit ultimately because you have to pay the hedge, right? If the hedge doesn't work out and price goes up, well, you've got to pay that hedge, right? You got to pay what you're losing on the hedge. If price is coming down against you, then your hedge is working, but all it's doing is canceling that bid out. And so you're losing that profit in it. Again, I'm not a big fan for most people doing hedging. I don't see a whole lot of reason in it. I haven't needed to do it and been, extremely successful without it. So, yeah. Let me see here. What about Link? Link's that other one I like talking about a bit. But I don't like talking about it too much because I don't want people to think I'm like pumping it or anything like that or trying to get you all emotionally into it. It was just a good setup, right? So, when I talk about Link or Sol, it's because the setups were good, not because, because I need you to pump my bags or something stupid like that. The setups are legit. Again, if we go over here, let's kind of turn everything off and look at the bigger picture, right? The setup is legit, right? This is accumulation here. As it appears to be with the volume and price action now, it's going through as I've done before, right? And you get your spring here, rally up, pull back. So you get your spring into your show of strength, into your last point of support. And so this one, it'll probably go up here and pull back a little bit, but then it'll break out. And it should be a large breakout. And you've got a lot of large candles here. So you should get your jump across the creek when it breaks out. You might get a jump across the creek up to pivot, pull back or back up the edge of the creek, and then rally back up higher. So, yeah. I'm showing my age by saying legit. But, yeah, again, I've worked so hard the 7 years I've been doing this publicly with you guys to hopefully get people to understand I don't ever pump anything. I don't care what you buy or don't buy. I just show good setups, and I talk about why they are and what you should be looking for. Sats is saying Link seems to have a lot of utility too. I'm thinking it will be one of the best performers this cycle. There's a lot of hype about that. Yeah. But you know me, guys. I don't look at the fundamental nonsense, right? No offense. I don't mean it like that. But it's just, again, guys, fundamentals are going to, for most of y'all, are going to lose you more money if you're trying to trade on fundamentals. Learning to trade the chart properly is a lot easier and tends to be a lot more profitable than trying to learn to understand and correctly figure out the fundamentals and what you should be doing. Not just correctly figuring out the fundamentals, but correctly figuring out what they mean and then correctly figuring out what you have to do in response to that. Fundamentals, charts are just like, listen, here's what we're looking for. Here's our validation. Here's our validation level. Here's our target. It's a lot easier to learn, a lot easier to get correct more often, guys. That's what we teach, right? I can talk about fundamentals all day long. I've done it here on the show, but it doesn't help you guys out any. Does that make sense, guys? Look right here. 1, 2, 3, 4, 5, A, B, C. 1, 2. Looks like we're on a 3. We'll probably get a 5 again, right around this swing high here. So it'll go 1, 2, and then you'll have a 1, 2, 1, 2. So you get 3 of 3 will be the breakout here. And in terms of Wyckoff, that'll be a large candle spread, large spike of volume. We call it the jump across the creek. It's just the breakout above resistance supply there. And that's what you'll see. And, I would look for a first target up here, 13 and some change there, 1320 or so up there around the weekly pivot. Yeah, 500-day range, because you guys aren't used to that, right? But if you look at stocks in terms of ranges, you have ranges that go on, like that often, right? You'll have stocks that range sideways for a long time. And so just remember, the longer you have that range going on, the bigger and stronger and further the breakout's going to be. Because in this case, again, accumulation here means you're getting off all that loose supply in people's hands. And they're not going to have it there to stop you along the way. So your breakouts are usually, going to be stronger and longer. And in terms of Elliott wave, it just aligns with a wave 3 or a wave 3 of 3. Everything comes together, guys. But yeah, that's simple as here. Again, looks like 5 up off the spring here, 3 back. So, spring, show of strength. Last point of support, rallies up here. It's going to pull a higher low here coming off here. It'll be another last point of support. That'll lead into your jump across the creek in this area. Large candle spread, large volume spike. Probably rally up again, at least to the pivot here. Probably pull back up the edge of the creek, and then rally back up there higher. So, again, Link looks good because it looks good. By the way, notice its support here is where the previous resistance was. Same thing we're looking at some of those other charts, right? Low volume node. Notice, low volume node. Guys, I'm giving you so much that if you don't know about, you should be learning right now. Different things to look at with different indicators and price action and price structure that can help you understand where you may be seeing, reversals happening at. You just got to pay attention, guys. Do all this for free here. Look at this. So, yeah. So I'm still feeling good about Link overall. And we'll see if we can get that breakout and do that and do what we're kind of looking for. Let me see here. I said I was going to look at Sol. I think I've got a let me see here. I think I've got a Sol one here. There we go. We'll look at gold here in just a minute. Who is that asking about that? I think somebody was asking about that. Mr. Conde over there. Yes. All right. So here's, again, here is Sol. I'm going to keep reminding you guys till you never forget that I told people that it was a good buy here on the Windio show. Right there at that 9.5 area. Said we had 15, and if we hit 15, we'd have 30. We did hit 15, and then we did hit 32.13. And when we were around 28, I said, not even 30. I said, now I'm looking at 50, 50 plus. And so, again, we just kind of pulled back. Looks like a 1, 2, 1, 2. 3 of 3 to be the breakout through this resistance right here. Right? So it'd be 3 of wave circle 3. Wave circle 3 has a minimum expected target up there at 78.25. And then minimum expected wave 3 target probably up there around 111 or so. Again, nothing here I haven't posted online for you guys. Again, it wasn't ever here to get you to buy it. It's just like, listen, look at the chart. This is where everybody was like, oh my God, it's the end of the world. Everything's going to die. Remember, I told you guys the same thing on GBTC. I told you the same thing on Meta. I told you the same thing on, I don't even remember anymore. All those ones everybody thought was dead there coming into, the last half of last year. And they thought, oh my God, that was the end of it. Carvana, again, when it dropped below 10 there, everybody's like, oh, it's dead. And I said, nah, look, it's, I would be paying attention now looking for the rally. And that was that one, that was that Carvana chart that just looks absolutely amazing. Had you listened, right? Look at this. That was over here. When we were dropping down into this area, that's when everybody's saying, oh, it's the death of Carvana. And, everybody, big news thing, everything, right? And I said, no, I said, this is the point. This is the capitulation. This is the extreme. This is where we start looking for that reversal. And it reversed right down here around $3.50 and rallied all the way back up. What is that? $57, guys, in about 200 days. If you were paying attention then, even if you waited for the pullback here to enter on the breakout here, you still would have had a great move up. But off that low, that's a 1,510% rally. Off that low there. A lot of money to be made, guys, if you all are paying attention. Stop worrying about narratives. Stop listening to everybody online talking about how, the fundamentals are this and the economy is doing that and unemployment is here and inflation is there. Stop listening to all the nonsense. It's just going to get you guys confused. It's just going to make you, a lot of times it sounds really good. But as you've seen over the last, God, what has it been, guys? Almost 2 years now. Everybody's been calling for, the Great Reset and everything. And what have we done? We've continued to go up higher. Pay attention to the charts. Don't worry about everybody's personal fundamental emotions or emotions about fundamentals. Okay? It'll save you guys a lot of pain. By the way, based on this structure here, you got a target up here at around $898 on Carvana, which will take it above the previous one. UAW is striking right now, which means no new cars on those big automakers, which means used car prices should continue to rally now, because there's no place people are going to be able to buy cars, right? Used ones. And that's what Carvana does. Another one that does it is, what are they called? They called Zoom? Oh, no, not Zoom. What are they called? Oh, I can't even remember what their competitor's called. Jeez, it is. But anyway, you can look it up. Real quick on Sol, could you say when looking at the weekly that it's looking like a rising wedge? How did I know you would ask that? My man with his wedges. Let me see here. Nope, that's the wrong one. We'll look over here. This one. There we go. This is a wedge right here. I wouldn't say this is a wedge right here. You said weekly. This right here. I mean, you're getting higher lows and not as higher highs, but I think it's a 1-2. I don't think it's a 3-4. Remember, wedges, guys. Wedges are the exception, not the rule, okay? So when you think you have a wedge, just always understand that it needs to prove itself as one. You can look at it and say, okay, maybe it's a wedge, but don't just assume it has to be a wedge, because well over half the times you think you're going to see a wedge, it's not actually a wedge, like a proper wedge, right? When you think in terms of, I always talk about Elliott wave because Elliott wave gives you definitive rules, right? You understand what a leading and an ending diagonal are, wedges, right? And you understand how they're put together. Same thing with triangles, right? Triangles A, B, C, D, E, right? It's 5 waves. Those waves are waves of three up. They're all corrective, right? But if you don't know all that, you go, oh, look, price is consolidating. It looks like a symmetrical triangle. It's got a 50-50 chance of breaking up or down. Well, no. If it's a proper triangle in Elliott wave terms, it's only going to break out in the direction of the trend, and it's going to give you the final leg of that trend before you get your pullback or your reversal. But people want to argue about how terrible Elliott wave is and how it's so useless. Shoot, this is definitely not useless, guys. Okay, even if it's not your main thing, understanding why Elliott wave works and the specific rules associated with it and guidelines will help you out so much as a trader. So yeah, Ethereum looks like a 1-2-1-2 as well structurally. Yeah. So yeah, it's going to look kind of like a wedge as well. But yeah, so I mean, again, lots of good stuff going on here. Again, I told you we had the volume down here at the bottom. Showing up like that indicates the larger players are putting in a floor. That's what we had. We noted when we were attempting to break out, we did. We retested, rallied up higher, retested. We're rallying up higher to the EQ right now, getting ready to break out. It looks. Oh, I know you are, Andrew. I was just using it as a point to speak to everybody else, of course. I know you, man. You're with us. I talk to you every day just about over there in the community there. Oh, by the way, guys, we're getting up to the end of our special here for our premium access, which gets you the twice a week or the 3 times a week educational live streams with Elliott Wave, Wyckoff, and price action. The courses, the Foundation Courses Forum, Traders Foundation course, chart requests, 25 different updated charts throughout the week and everything. All this stuff and so much more writing to it. But you can get it for half off right now. So I've got it pinned on Twitter to the top of my feed there. Jump on that link while you still can. Once it's gone, it's gone. I can't mess around with the pricing plans and whatnot like I used to be able to when we were hosting ourselves. So when it's gone, it's gone. That's it. There's nothing I can do about it. So if you want to take advantage of that and get well ahead, I mean, it's just, do you want to feel more confident as a trader? Do you want to actually understand? Do you look at me and go, man, how are you so calm all the time? Well, because I understand what the price action is doing. I understand what the likelihood of it's going to be, whether it does do what I think it does, or what that invalidation level means and what it means as far as prices do the other way. So there's always money to be made up and down, guys. And once you get that, you don't do the FOMO anymore. You don't have the fear of missing out anymore because you understand what generally happens, how price tends to work. And that's what I teach day in and day out. Again, whether it's price action or whether it's Elliott Wave or whether it's, the Wyckoff method, we do all that. But you can also get in at our $11.99 a month. That's the community level there that gets you intraday updates for Bitcoin, Euro USD, and the S&P E-minis, along with some other things there. And once you do that, you can just buy specific chart channels if you want, or chart spaces, or we've got bundles on them if you just want all the crypto ones, or you just want Ethereum. Yeah, you can choose how you want to do that. So, but the half off on the premium is going to be gone soon. So there, we got that. Mr. Lamb, what's going on? It's about time you showing up, buddy. Hopefully life's treating you all right. Let's check out gold here. Mr. Lamb, be sure to send me a DM, buddy, so I can get you transferred over to the new, migrated to the new platform. I think you're going to love it, man. Everybody else absolutely loves it so far. And so much better than Discord even was. And it's coming up with all that functionality Discord has pretty soon here. They're implementing it coming up, I think, this quarter. So makes it even better. Oh my gosh, where's my gold? There we go. Let's check this one out here. Yeah, you definitely need to do that. Let me, get a hold of me, DM me. I know your name, but your email address. And then I'll send you the link and you can get through that. These are old charts. Geez, always. Okay, what do we got going on here? So ultimately, it looks like, let me kind of get this over here. Basically, we're potentially looking at a 1-2. Could be a flat, though. It could be wave 2 here still playing out with silver right here. But ultimately, silver, guys, what we're looking for is this breakout of this descending trend line here. And then we have this other interior one here as well. Let me see. But basically, we have a looks like a 1, 2, and then a 1, 2, 3, 4, 5. Gives us 3, 4, 1, 2, 3, 4, 5. So that's 1. A, B, C is 2. And that pullback here. Look at almost to 70.5. That's at right down almost into that higher volume node. Institutional level pullback there. And so that should then get us geez, I don't even know. Wave 3 would be up here. I've got it up here at around $80.97. And again, that's with the with the extensions here, based fib-based extensions. So basically $81, we'll say. If you don't want to use the fib-based extensions, I mean the based on log scale there, then you're looking at 47,365. 47,365 as your wave 3 instead of the higher one there. So, you know, you can target that, and then if it continues again rallying strongly out there, we can look for that move up there. Locally, again, we've got this ABC here. Let's see. It's possible this could be like an ABC as a W, and then A, B, C, D, E as a triangle, and then get an ABC down maybe, a little bit lower here. So yeah, if we're breaking down here, I think, you know, potentially a triangle going on here. That's a big, you had a good rally and a big rejection coming off that. But, you know, again, I don't think we'd stop at 50% in that case. I think we'd come down maybe almost $21 there for 61.8. That's in the wave 4 here. Or even the 70.5 at $20. So I think maybe we might actually be looking at this as it's continued to play out here. Let's kind of do it this way. So A, B, C, D, E. Mouse is a little loose here. All right, there we go. Yeah, well, and that wouldn't even be a A. I guess it'd be a W, right? Because it'd be A, B, C down. That's what I meant to leave it there. Is that okay? Yeah, well. Something like that. Again, and then so then you would have this here as an A, a B, C. And then you'd be looking for, you know, an ABC coming down here as well. So, I mean, this could be A, B, and C coming down here. You know, look at the 50 at 21.91, then look at 20.85, and then $20.05. And those would be the targets I'd look for. I think it's probably what we're doing. Oh, this is silver. Yeah. So if this is silver, then gold. Right over here. Again, you know, you get your 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4, 5. Same idea generally. Let me see here, except this, I don't know, this might be 5 down. We go 1, 2, 3, 4, 5 more here. Bring this all the way down here. Again, 50% there at 1852. 61.8 gets you in the high volume node. Actually, I think that 3 is going to be this lower end here. Yeah, let's go ahead and do that. Let's do this like this. 3, 4. And again, wave 2 should pull back into the wave 4 area here. So this area is most likely. And then we would just need the confirmation level being the breakout above this swing high here. Actually, you know what? A, B, C, D, E. It's a triangle. Same thing as what's it called there? As silver. Same kind of setup. So probably a WXY. Then we get a WXY here similar. Let me see here. A, B, C, D, E. There we go. Oh, let's see. Yeah, so like that, that. And basically, we're just, again, looking for this breakdown probably towards 1797 here. Around that area, around this high volume node, right around 61.8, I think. We probably get like a bounce here, maybe at the 50, and then come down. But kind of looking to come down toward this area. This is the weekly, by the way. And that would probably end up resetting the weekly RSI and Stochastic RSI on a wave 2 pullback, which is what we would like to see. Yeah, again, I don't think that's going to be an ABC. I think it ends up being a WXY. But, you know, again, it's just a pullback here, and then we'd look for the rally and breakout higher. Does that make sense? What does the DXY look like? Those are strong sell-offs on the on silver and gold for this right here. I was expecting to see this having taken off here with those strong kind of sell-offs on gold and silver, but no, we're coming in right to this support area right here. Yeah. Does that make sense, guys? With both the gold and silver breaking out above the triangle resistance. So in gold, that's 1968.90. On silver, that's going to be 23.92.5. Breaking out above that will indicate that wave 3 is in progress and heading up there. So, you know, you can just look for that. If you're not comfortable taking a long down here, just look for that breakout to kind of suggest that it's heading up there. Does that make sense? That's all we're kind of looking at, guys. This looks capitulative, the strong, you know, and we would expect it. So when you have a triangle, what you have is a thrust out of that, and that's exactly what this looks like here. It's an impulsive move down through the triangle. It comes when you have this is what I'm saying, guys. When you know what you're doing with proper triangle, so Elliott wave and stuff like that, you know what to expect, right? So yeah, see here, A, B, C. Yeah, I think that's D, and that would be E there, and then coming down here, this one. Like I said, we might get a bounce around these areas here, a little bit up, and then ultimately come down further toward that 61.8, I think, on either one of them. But breaking out above that triangle resistance, wavy of the triangle on gold, right around 1968.90, and here on silver at, well, on silver it's $24.05. So breaking above those should indicate that the low is in and we're heading up to new all-time highs, which means for gold, you're going to break out and make a new, well, gold here, you're going to make a new all-time high. Silver, you're just going to make a local high here. Remember, silver is falling behind gold. They both had their swing highs back here in 2011. Gold made, that higher high out of there, but silver is still way down here. But on the bright side, you had a base here, rallied up, came back, finding support on that base, creating another base, looking to break out higher. Again, going back to what I talked about Bitcoin at the beginning here, same idea locally, right? Made a base, rallied up, looks like we're making a base on top of it, and we wanted to break out higher there to kind of give that So the daily DXY looking bullish. Sure, it's going to look bullish. It's been rallying. Oh, this one right here. I don't know that this looks bullish. It's a possibility. We do have a bearish engulfing candle here, so we want to see some follow through. So, we could get this bounce up here, and then when it opens next week, have it roll over and continue lower. Yeah, that's possible. Or it could even start selling off by the end of the day. This could just be a quick strong buy here at the beginning of the day, do at the end. But we'll see what happens. Again, if it breaks out higher here, we're just looking at 107.5, 109.2, and maybe even 110.5. But it's still just a wave two, still just corrective, right? Yeah. So again, nothing. I know people are like, oh my God, it went from 100 to 110. Yeah, so it's still in this part of this downtrend here, right? It's still, the top is up here around that almost 115. It's, and these are solid wave two targets. So you can long to those targets if you choose. And then if it keeps breaks out higher, it may. Remember, because I've got that other chart. Before I get out of here, guys, I'll show you real quick. Is it the dollar one? Is it this one? Or I've got the big macro count on it. I don't think. Yeah, it is. It's this one right here. Here we go. Remember the big macro count. This looks like a flat correction. We got A, B, C, then we get D, right? But again, it's possible this could be 3, 4, and 5 still to go, which would give you that 125.7 target. And then you'd have this big drop back on down here to 70. Or again, as we're looking at this, 1 as an A, B, C as a flat and a 2. If we get rejected and come on back down, again, wave 3 down here at around 75. Wave 4 back in the low volume node around 86, and then wave 5 potentially down here around 70 to finish it. So, that's kind of how I'm looking at it at the moment. If we look at this big macro chart from back here and these are monthly candles, by the way, but back here from November of 85. So that's what, what we see with all that. October 87, that's when you had the market crash there, right? Black Monday. And so October, November, December, it was just the capitulation point of this decline. It rallied up, then we kind of finished down a little bit more on that, rallied back up, and of course, we got to the dot-com bubble up here, topped out, came back down. Let's see, we get down here. We're getting down into the great financial crisis over here. Rally back up. We had COVID. Let's see, we had COVID on this drop right here. And that's when I said down here at the bottom, that January, I said that's the bottom there. I said 114, 115 was the target. We got what, 114.745. And remember down here, everybody's really off sides. Everybody's very short the dollar. Something like 95% was the 90 or 95%, somewhere around 93%. Was what we were looking at. And when the market gets that far off sides, it's never rewarded. So I was talking about that. I talked about how usually you get the reversals at the beginning of the year, stuff like that. And, again, we got that in January, rallied it up, hit my target, pulled back to 100, psychological, 10's number, 0's number. Got the bounce in that area, rallying back up. So again, nothing really overly terrible about it, right? You can see that we rallied up just into this kind of area right here, right? Support, resistance. So yeah, no wonder we got rejected there. But yeah, we'll see what happens with it. Anything can happen, guys. But here again, as I tell you guys, you have to have a plan, right? I think this looks like a flat correction, and if it is, it could be done here, or depending on how you count this here, this could be heading up a little bit higher, maybe 125. Okay, either one would be fine for a flat correction. But if we do get rejected here and break down below, then the odds are the count, as I've got it here, is correct. and we'll look for wave 3 to head on down here towards 75. Right? Does that make sense? So there you go, guys. That's what I got for you. Hopefully you learned a little something today. We'd love to have you join us over at members.texaswestcapital.com. Whether you come in for the cheap seats, which is okay, get a feel for us, understand that we are here seriously doing what we do. We are not a paid group, as like everybody likes to say on Twitter, right? We're an education company. That's what we do. But we do offer other services. But at the end of the day, the goal is to get your mind straight, to get your mind right, to get you out of all the half-truths and outright lies that litter the online world, that litter social media, so that you can actually make money as a trader, so that you've got a chance to make it. That's the goal, guys. That's the goal, okay? I mean, just, man, imagine being able to, look at the charts with a lot more confidence, right? Where you don't have all that depressive FOMO and everything that happens all the time. That's the goal. Get you out of that. I appreciate you guys joining in as always. Remember, the only thing you control in the market is how much you lose. That's it. That's it. So, stop listening to anybody else that tells you not to use stop losses and they ignore the idea of risk management. That is your edge, especially as a new and or inconsistently profitable trader. Your edge is risk management. If you can get that down, you've increased the likelihood significantly that you're going to be able to become a profitable trader, because you give yourself the gift of time, because you're not going to lose it all right away. Okay? So while you learn and you get better, you still have capital to trade with. You guys have an amazing day. Have an amazing weekend. If you're in the mentor program, guys, don't forget we'll be meeting in about an hour. I'm sure I'll talk about something that'll be very intriguing. I always do. But we'll see you guys on the other side, all right? Y'all take care.